This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. Hey everybody, I'm going to be making this video fairly short, but what I will be covering in this video will be the datasets, the earnings, and I'll be doing an overall technical analysis for the SPY, overall markets, and I do want to discuss some of the future plans that I've been kind of working on over the last few weeks. Now, I will not be doing any live streams this week. For those who have not gotten the news otherwise, I was in the hospital for a week. Um, Finally out of the hospital, so I haven't been able to post any videos or anything, but I'm still wearing my cast, and it's just far too hard to stream in the morning with my cast on because it makes it almost impossible for me to draw on the graphs and everything like I need to. So we'll go ahead and resume the streams after I get that cast off on May 1st. So that next week, I believe it starts the 4th, if I remember correctly. We will be streaming, you know, the 3 standard days. But with that said, it's nice to see you all again, and let's go ahead and get straight into the data. Now, we do have a very busy week in terms of the data sets. Monday, not so much. Tuesday, we do have some of the housing index stuff. Not really too concerned about that. I am starting to look a lot more at the ADP weekly change. That's been gradually climbing. Whether that's because of companies thinking that oil prices going up is going to lead to better customer retentions and things like that. Not entirely sure yet, but we also have the CB consumer confidence coming in the same day. Now, usually the CB consumer confidence isn't a major deal, but it has been roughly over the last um, 6 to 9 months, give or take. And the reason why is because the CB consumer confidence has been at a level where every single time in the past we've been below this 90, I believe it was 93, but below that 90 whatever range, we have entered severe market conditions, we've entered a recession, and it's been every single time. Now, again, the CB consumer confidence is a soft data set, so it is heavily opinion based. Um, Not hard data like, getting some of these other data sets coming in. So take it with a grain of salt. They are expecting the forecast to come in under that 90 mark again this week. So, um, that can play a fairly large role on Tuesday. Now, for Wednesday, we have quite a lot going on. We have the durable goods orders in the morning. Now, that is something I want to start looking at again because I know over the last roughly 2 quarters now that we've been really taking or, keeping somewhat of a track of them. The orders have been terrible. They've been within the negatives. They've been pushing down, down, down. So with this forecast this week showing, potentially some positive uh, within those numbers, those can start playing a major role into the market. Okay, and I'm not going to go over why in this video. That's going to be much better suited for a different video. With that said, housing starts, I'm not too interested about. Um, Atlanta Fed GDP now, it's really interesting. And this will be the quarterly release, so not the weekly release like standard. However, if you all remember, I want to say what 6 months ago, this was all the way up to 5.4%. Um, so we've been seeing this just drop and drop and drop, and a lot of that is that correlation to oil. And this is a very large reason why I say that oil is not inflationary, that it actually creates deflationary conditions because it's wrecking havoc on our GDP right now. Um, what's also important on Wednesday is we have the FOMC. Um, Pretty much it's going to be a pause whenever there's wartime conflicts. Generally, the sane and smart thing to do is to pause rates. Now, I know there's been some hawkish discussion about the Fed potentially raising rates. I think that's completely out of the ballpark right now. I think we would have to see the actual consumer sentiment and everything start massively increasing, and we'd have to start really seeing not just the GDP picking up, but the hiring picking up as well, which we haven't been seeing. Even with the continuing jobless claims continuing to pull downward, rather than move upward. But I'll discuss that in a couple seconds here. Now, the FOMC press conference is going to be pretty important. Sorry about that. My daughter kind of barged in the room, so I don't really remember where I was discussing. But with the press conference, it is going to be very important, as potentially this could be Powell's last FOMC press conference. May not, but from what I know, I believe his tenure ends on May 6th. Not entirely sure about that, but this might be the last press conference we get with Powell. With that said, Powell and our great president right now do not have a quality relationship. Um, there might be some things said from this Fed conference that could potentially be fairly impactful for the market. So it will be very important to listen to this press conference, even if I really don't expect anything out of the end result. Meaning I'm not expecting some rate hike or rate cut, anything like that. We should almost 100% be seeing a pause and checking with the Fed CME now, or the Fed, the CME Fed now. That also shows us that the pause is pretty much priced in at 100%. It's not showing on your screen right now. I do apologize, but you can check the CME, the Fed watch, and you'll see that we're pretty much priced in for a pause. Um, if we get something outside of that, that'd be kind of out of the ordinary. Now, getting into Thursday. Thursday's a huge day, absolutely huge day. The main reason why is we get a ton of very, very crucial employment numbers. We get the quarter one GDP. We get the GDP price index for the quarter. And these are the preliminary results, so they're going to be very impactful for the market. It's not like these are revisions or anything. These are quarter one preliminary readings. So market generally tends to, you know, price these in pretty hard. Now, with the forecast on these, the GDP, um, they're expecting a slight rise, which I could see out of the quarter one GDP. I could definitely see seeing a slight rise out of that. However, we have had a lot of oil struggles, so that may not be as high as they're expecting. And the overall GDP price index quarter over quarter, that makes sense. But again, that's only if we're going to be seeing that higher quarter one GDP. If we see a lower quarter one GDP, then the quarter over quarter will also move down as well. And we also have some other important data sets. We have the PCE price index, we have personal spending, and this is also going in line with the jobless claims. Now, discussing the jobless claims, okay? The initial jobless claims has still been basically at a very, very heightened and elevated range, and it's been at that way for weeks and weeks and weeks now. But we've been continuing to see the continued jobless claims falling through the floor. Now, I've been doing my own studying and side research. I'm not going to include that in this video, unfortunately, but we have been seeing a lot of job seekers actually exiting the job seeking market. Um, That's interesting to me because that means that people are just choosing to basically drop off the job or off the unemployment and just be out of the system. Um, we will know more of that once we get the actual unemployment rates because we'll be able to see the M3 and that will tell us how large the overall participation is. So that's going to be very important. I think that's next week if I remember correctly, but I will have to double check into that. It's not super super important at this moment. Other than that, there's definitely a divergence going on here. We're seeing the initial claims still extremely elevated, but we're seeing the continuing claims falling off. and we're still seeing job positions pretty much not being available for people. So, um, really, what that's saying is that the labor market is continuing to slow down. Um, so yeah, all that information comes out at 8:30. It's a huge data drop. It's going to be one of the largest data drops we've had in a fair amount of months now. Just due to the mass sheer amount of very, very crucial data coming out. Now, with that said, after surviving that 8:30 time slot, we have the Chicago PMI for April at 9:45. Not super concerned about that. They're expecting a slight increase. Again, I don't really care too much. Um, Atlanta Fed GDP now and the US leading index. They are expecting the US leading index to come in slightly weaker. So overall, that's really not a good thing for the overall market. Friday, let's see, global manufacturing. Okay, so we have the global manufacturing slash ISM manufacturing data. So this will be showing some of the employment side, and that will also tie in towards what I was discussing with the jobless claims and everything. But the non-manufacturing side is the one that's really, really important, and that's the side that we'll see next week. Generally, these are released within the same week, so usually you'll have the manufacturing side released on, say like a Tuesday, and then you'll have the non-manufacturing side released, say Wednesday or Thursday. In this case, they're just releasing the manufacturing side on Friday, and very, very likely early next week we'll see the non-manufacturing side. So, okay, mouth salad over. Additional notes, US blockade on the Strait of Hormuz is still ongoing. They are trying to clear a lot of mines in there and everything right now. There is a potential deal from the Iranian side, and that deal is basically saying that USA needs to remove their blockade, allow, everybody to clear the mines and everything, and we can reconvene on the, nuclear situation later down the road, but let's at least get the strait reopened. Um, I do think this deal very, very likely will go through, because the Strait of Hormuz is a massive, massive contention point. I mean, obviously, it's been causing major, major market fluctuations for the last almost the entire quarter. So getting this deal, I think, is very, very, very hopeful. Even if some of the wording from our side might sound tougher, talking a tougher stance, saying, the Iranians don't even know who their leader is right now, blah, 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 blah. But I do think that we want the Strait of Hormuz reopened. I think that having that reopened actually gives us a lot better access to preventing a major, nuclear escalation. And the reason why I say that is because it allows our ships and everything to actually get closer. If there's actually going to be another, um, you know, attack where we go and take out their uranium sites and everything else like that. So overall, I'm hopeful on the current situation with the war. I do think that it's still going to be playing its role on the oil volatility for a while, but things are starting to look pretty good. Um, and within the charting and everything, which I will cover in a little bit here, but within the charting and everything, it also reflects a lot of that hopefulness that we're seeing. So anyway, let's go ahead and jump into the earnings. Now we do have a very big week on the earnings front. So as you can see, tons and tons of very, very important companies. But really getting into it, Monday, I'm not too interested in anything going on Monday. No major techs or anything else. AMKR, not too worried about that right now. Tuesday, we have Spotify in the morning. That's interesting. And we have Robinhood, Starbucks, FICO, Teradyne. So nothing super, super great in the after hours on Tuesday. I know some people play Robinhood pretty religiously for their earnings, so have at it. But Wednesday, I really think is the big day. Well, between Wednesday and Thursday. In the morning, we have SoFi. Um, Not too much I'm interested in the morning for Wednesday, but for the close, we have Amazon, Microsoft, Meta, Google, Qualcomm, Carvana. Um, I mean, a ton of major techs here. Also Chipotle Mexican Grill. I know that, some play the earnings on that. What's the actual share? We actually had shares in this a while ago, back when it dipped super hard. But I sold those a while ago. Now on Thursday we have Ellie Lilly in the morning. I know many play that as well. So that's going to be a nice one to trade. Now, one that we haven't talked about, which I do play very often, is Mark. Well, Merck, however you want to say it. Um, this is a Medicare company or healthcare company. Generally, you can see the price action on this company move between the $70 range to $120 range very, very, very consistently. So it's something I'm pretty much always trading. So not that that matters for earnings, really doesn't, but it's just interesting because I saw it. Um, After the close on Thursday, we have Apple, we have Reddit, Rivian, Roblox, Solar, SanDisk. So really, the big ones, Apple and SanDisk. Those are going to be major, major, major players for Friday's trading session. Now for Friday, we have a lot of oil earnings. I don't really care about oil earnings too much. Um, I think the price of oil is really what matters for those companies. So big week with the earnings, but primarily it's the Wednesday and Thursday after hours that we really have to be paying attention.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
All right, everybody, and getting into the technical analysis. Now, I am going to do this technical analysis a little differently. Usually, I would be discussing the moving averages and all sorts of different mechanics and whatnot. But there's a few things I really want everybody to sort of focus on this week. And I guess the main reason why I want you to focus on this is because I wasn't here last week. I didn't get to trade any of this price action. Um, Again, I was in the hospital the entirety of last week, so I didn't get to watch the prices. I didn't get to engage in any of this. Okay. Um, it may not seem like a lot of time to not be watching symbols, but within just those 5 daily candles, that's news sentiment, that's all sorts of different things going out throughout the world that I just had no exposure to. So, with that said, getting off of the technical side a little bit, we know that the market has pushed up very, very hard, very quickly. Okay. We were at a bearish stance the last time we talked. And the last time we talked, let's see what we got for the drawings. I think the drawings are all messed up. Okay, so last time we talked, we were nearing this top of this cup. Okay. This bullish cup structure closed. And so what we were looking for, and it's actually funny, a lot of these notes from last week, or not last week, the week before, actually still apply currently. So ignore that for a second, ignore that, and ignore that, but I just want to keep these there for a second because I do kind of want to talk about it. So before I was gone for the week, we had a few things happen. We had that upper Bollinger push, we had the 5 mile retest, and then we started to get ready to repush the upper Bollinger again. Now, the big thing that I wanted to highlight is that on the weekly time frame, and I stated this last week before I left for the hospitals, that on the weekly time frame, we did have the week one upper Bollinger push. Not last week, but the week prior. Okay. With that week one upper Bollinger push happening, that meant that week two, we were expecting a higher high. Okay. So what does that mean? That means generally following the Bollinger mechanics is that within 2 to 3 iterations after that higher high of the day two upper Bollinger, well, let's say week two upper Bollinger in this situation, is that within 2 to 3 iterations, so 2 to 3 weeks, we should be seeing a consolidation back down towards the 5 mile. Now the weekly 5 mile is still below the 20 mile. The weekly 10 mile is still below the 20 mile, but we have had our moving averages do somewhat of a bounce off of that weekly 50 mile. Okay, so overall these are bullish. The 5 mile will be pulling up above the 20 mile, very, very likely on open tomorrow. It should be well above that 683-ish plus range. But that means over the next few weeks, our target, and just 1 second, is that our target is now really basically going to be in this area. Okay. Now at the top of this completed cup on the weekly time frame and on the daily time frame, we have some things that we have to look at. Okay. Is that with this cup being completed, we should now be looking for a handle to the downside. We had that large move upward, and from the upper Bollinger pushes, we should now start seeing that downward consolidation. Now, one thing we do have to be careful of, and again, this is on the weekly time frame, is that this can head right back up and do an even deeper upper Bollinger push. Okay, this week is, if there's ever going to be a week to do that, this is kind of that week. We have massive, massive earnings. We have potentially a real possibility of a major ceasefire coming in. Um, there's a lot of really solid catalysts to drive equity buying. So can we be seeing an even higher high out of this this next week? Absolutely. We could even see a second push into the upper Bollinger again, where it would give you the upper Bollinger week one and then the higher high of the upper Bollinger week two. Okay. If you're trying to short this, don't. This is not the time to short this on the weekly time frame. Now, to correlate this back to the daily time frame, when do we usually enter our short positions? And I want to just make things very, very easy. And sorry, it's hard for me to draw. I'm still, you know, using my non-dominant hand, so everything's a little slower. But where do we take our short entries? We take our short entries at the upper Bollinger. Okay. Well, we're not close to that yet. On the daily time frame, we've actually been seeing some consolidation. Even though we did tag the higher high, that's following that week two higher high. Um, that fits perfectly well within the bounds of what the market should be doing. Now, with this 5 mile test being, or with this 5 mile level really being held onto over the last week, um, that can lead to two different major outcomes. Either one, we start seeing that bearish structure that I've been expecting up towards the top, and then we start pulling down and forming that handle, getting that weekly 5 mile retest, potentially seeing a 20 mile retest out of the daily time frame, or we can again see that overshoot because on the daily time frame, there's nothing stopping us from pushing right back into the upper Bollinger here. So again, this is not the range to short, but this is not the range to exactly go long either. The true move for this week is to either allow this to push into the upper Bollinger or allow this to start falling towards the 20 mile. And that's for the daily time frame. On the weekly time frame, that would be essentially either another upper Bollinger push into the weekly upper Bollinger, or we're going to really start seeing the market slowly pulling down towards the 5 mile on the weekly time frame. So overall, the short-term market is very bullish. On the daily time frame, we have our 5 mile, 10 mile, 20 mile above the 50 mile, which that's exactly what you want to see in a bullish push. We have the 50 mile above the 200 mile, so that's looking very good. And, a lot of our short-term support has been pulling away from these larger, um, these more dated moving averages. We're not out of the zone yet. I mean, we're not out of the woods yet in terms of things being bearish, because again, this was something we were kind of looking for, with oil volatility being the way it is that generally when we have oil volatility kicking into the market, you usually see all-time highs. And this is something that is true, going back years and years and years and years for conflicts and conflicts and conflicts, is that right before oil volatility kind of tops out, we usually see the markets just absolutely blasting. Um, but what's true about the market still is that, and let's just go ahead and check some things. We know that since the market in year to date, we've seen the SPY mostly consolidating and selling off. Okay. Now that we're starting to get this good news, and now that we're starting to see some of this, hype AI news, all of this selling turned into a massive buying opportunity. And we did buy the bottom. If you've watched my videos, we nailed the bottom perfectly. The only issue about that is that we cut a lot of the upside positions at the 20 mile instead of expecting this absurd push all the way into the upper Bollinger. Generally, within that short-term bearish market we had, you would see a push to the 20 mile, rejection back downward, push to the 20 mile, rejection back downward. Okay. Now, again, a lot of this selling was going on due to the oil volatility. And now that the oil volatility is really starting to peak, we see this massive buy to the upside, which is exactly what we've been talking about for months now. But what we're also seeing, and I want to look at USO on, but what we're also seeing is that oil's starting to taper on many different fronts. Now, this looks like it's starting to form a cup towards the upside. But on the futures, we're actually seeing a large head and shoulders starting to form. So that's making me think that very likely we're going to be seeing this ceasefire coming through, and very likely we will be seeing, um, that head and shoulders playing out. Very, very likely this being kind of the last of that oil volatility. And again, I just want to show this on the CL main. As you can see on the CL main, how with USO is trying to push up into this range well above, um, where oil's actually trying to trade at. So USO is a little extended right now, but this doesn't change the fact that we still have a very, very, very present head and shoulders being built here on oil. Okay, and if we do get the type of news this week that, we're expecting, then this thing is going to get ready to drop like a rock. Okay. Now, what does that mean when it drops like a rock? That means we're really expecting roughly about $40 of weight to be taken out of oil. And that's just through the crude oil main. On USO, we're looking close to $60 to $70 a barrel. So let's just pull up USO really quick. So yeah, I mean, that is a massive move to the downside. Um, 70 plus dollars roughly downside weight. So, not that I'm saying this is the super opportune time to short oil. However, this is kind of what we've been really looking for throughout the entire quarter now. This is building up almost exactly how we've been expecting it, and now we're kind of at that crescendo. Okay. How I'm really playing this is with this fund called Drip, and I can delete this arrow because we had that bounce. I'm playing this with the fund called Drip, and with Drip, we should be seeing once oil starts moving downward. This is the bear ETF, um, based on oil, gas, and everything. So this is going to gain weight as oil drops. Now, oil is one of the fastest dropping commodities once oil volatility actually does drop and is fully defeated. So I am looking very much so towards this 9, 10, potentially even $11 range. Okay. And if oil really, really, really drops to the floor like it potentially can, then we might even be seeing well above, that $11 range. But not getting too hopeful. This is looking like a very clean 100% plus equity type trade. Okay. My current buy-in on this overall, and I have a little over 12,000 shares currently, is at, hold on, check the actual price on my phone. I want to say it's 481, but I'll double check. Sorry, just one second, everybody. Trying to open up my brokerage really quick. Okay, yeah, so my average right now is 4.796. Okay, so I'm super happy with that. In fact, I'll be continuing to add a lot of my profits from the day trading and everything into this fund because this is going to be a very, very massive play. This is going to be a very, very great trade for many types of accounts, whether you're a brand new trader or starting with just a few $1,000s or a few $100, or you're somebody with tons and tons of money. This is going to be a super quality trade. Okay, I'm expecting to make quite a bit off of it, and this is a lot less, um, you know, based on theoretics or anything else. This is based on exactly how the market moves. Um, so heavily looking forward to this trade. Okay. With that said, um, so I don't want to ramble too much in this video. I'm really taking this week pretty relaxed in terms of going crazy shorting, going crazy buying. And this is the semiconductor ETF. Um, this was showing that major range where we were seeing that basically consolidating but buying. Because let's check the year to date. Um, Essentially, the year to date on semiconductors was buying for the majority of it. Compared to tech, if you look at QQQ, year to date, QQQ was pretty much in a straight sell-off. Okay, so what I'm really expecting is oil to go down, precious metals to go up, volatility to pick up, the dollar to pull down, because again, once oil prices do start pulling downward, the dollar will start pulling back. If I can actually circle around to it. Forget the drawings for a minute. We're just gonna delete the drawings. I don't care right now. No, I don't want to delete the drawings. This is following a very important trend line. Um, I'm expecting the dollar to head back up, or to head back down though. Um, and again, something we've been looking for basically right before this oil volatility started was that the Bank of Japan has to pull the price of the yen upward. Now, there's multiple ways we can track the price of yen. I use FXY, but you can also use the USD JPY. Um, this was starting to pull back up towards January, February, right before the oil volatility started. This means that the Bank of Japan has to sell securities to buy yen. Okay. When they did this the last two times, they were massive, massive, massive sell-offs. The large sell-off of 2025 was largely attributed to the Bank of Japan, even though many traders attribute it to the tariffs and everything. But what I'm saying is that a very, very great trade is opening up here on um, yen. Because USD JPY should be dropping very, very soon here. Once we start seeing oil volatility drop, central banks can start moving again. Because remember, as I said, central banks really like to kind of just cease operations when there is war. And with the Bank of Japan following pretty much within the footsteps of what our Fed does in terms of how they navigate their market, um, or market and economy, excuse me, then that means that very, very likely with the dollar dropping, that's going to be a buying opportunity for the Bank of Japan to start pulling the yen back upward. So we should be seeing a lot of selling within equities when that starts to occur. We should be seeing precious metals being bought up very, very drastically. We should be seeing the dollar heading down very, very low. Now this was starting to head down towards this 95 range when the Bank of Japan really was starting to enact some of that yen buying. This was kind of exactly what was happening with the DXY during that time. Um, I expect the DXY to pull down towards the 92 range, basically a range we haven't seen in you know years now. So what that will do for the market is that it will lead to a very temporary but very large drop within equities. It will lead to a lot of buying of dollars in the very short term, but it will lead to a very large influx of dollars within the system. The DXY will pull down, the FXY will jump upward, and this is why I'm bringing this up because the position to enter FXY again is starting to really open up again. Um, I'm gonna start pricing out some contracts, not in this video, but I'll post them in the Discord and everything. But we are gonna start pricing out some of these 60 call contracts for the end of the year. And again, I have some major expectations on this, but we could be having these calls run, a whole $7, $8 upside. And for a fund like FXY, that's quite a lot of money. Um, I know there's a whole ton to cover ever since I've been gone, but I do have to kind of just get my bearings on everything again. It was kind of hard being at the hospital and whatnot. So, um, but yeah, I want to go ahead and kind of just end the technical analysis for tonight. So, very quickly, again, the expectation on SPY, which is really the overall market right now. Either we will be having that push to the upper Bollinger, or we will be seeing the 20 MA having a retest. We have not tested the 20 MA for almost 20 days to the point or um, you know, to the day. So that means that the 20 MA is very well within bounds to be tested again. So can we see a downward test of the 20 MA, complete this, cup and handle that's been forming and continue pushing to the upside? Absolutely. I don't think that's going to be the case though, and I will kind of throw my thesis out during this week later on as I'm feeling better. But I do expect there to be quite a bit of selling in the SPY this year. I still expect the market to be hitting around that 550 range, which seems absurd right now, but I still have very high expectations on that. Now, one thing that I do know is that with Soxel, and this is the semiconductor ETF, the bullish ETF, um, with Soxel, it becomes one of the main primary short targets when trying to short tech overall. because it allows global exposure to the short positions. So with how heavily Soxel has pushed upward, um, this is becoming a very, very quality short entry. Okay. Now, the short entry on this is going to be multiple different ways. Either you can straight up short Soxel, you can get Sox puts, or we can use the Bear ETF, and which is called Sox S. We've traded it before many times on, in my chat on this channel. However you follow me, this is something we've been trading for a very long time now. I'm going to be looking for some 20 call leaps, very, very likely, or maybe even 15 call leaps. We'll have to see for the end of the year because with how heavily semiconductors have pushed, with how heavily the market is starting to push, it's really, really leading to the conditions for a massive, massive, massive sell-off. And I know that may not seem like that for a lot of people right now, but something that Silverliner brought up, and I'm really glad he did, because it's something I always forget, but April's is one of the most bullish months of the year, historically. Ever since the stock market's been in existence, April has always been one of the most bullish months of the year. We're getting ready to exit that, literally this week. Um, so can we see this kind of being that last week of bullishness before we start seeing that large pull downward towards the downside that I've been expecting, potentially? Um, but we'll have a lot of signals to really determine that. Um, so don't jump the gun on anything yet, but just be paying attention to chat. If you watch my channel just through YouTube, please feel free to join the Discord. You don't have to pay to see the general chat, and I will be posting some of my, what I'm seeing with the overall thesis moving forward in that channel. So, or you can leave a comment on YouTube and I'll follow up on that. So, um, yeah, we have a lot to see this week, but don't go too crazy expecting too much further bullish upside here. We can have it. We do have the room to move up technically roughly about a whole $18 from where we're at. SPY is telling us that. Purely because that upper Bollinger has, exposed itself. But we're starting to exit that bullish month. We're starting to see the oil volatility start to hopefully, end its cycle. And that gives the Bank of Japan the green light to really start selling securities and, propping up their currency again. So, okay. All right. That's going to be the video for tonight, everybody. Sorry it was so rambly, but I haven't been able to make a video in basically like 2 weeks now. So, um, I do appreciate your patience. I do appreciate each and every one of you that take the time to watch my videos, to comment, subscribe, like. It all helps with the algorithm and it helps get more exposure. Now, one thing I do want to end this video with is that I have two big projects that I'm working on this year. Okay, and this is kind of the main thing that I wanted to cover in this video is that I'm building my own AI. Um, This AI is going to basically run 24/7. It's going to run through the entire market and it's going to be highly, highly, highly configured for my rules, meaning buying at the absolute bottoms, selling at the absolute tops. Um, a lot of the very, very structured mechanics that I teach that might be hard to follow at times are going to be deeply ingrained in that AI, and it's going to be, uh, you know, creating new buying opportunities and selling opportunities throughout the market that personally I can't provide as a standard human, I can't watch, hundreds and hundreds and hundreds of symbols down to the wire. What I can do is I can watch the overall markets. I could watch corporate credit, I could watch treasuries, I could watch FX, the overall market. I could keep a very close eye on the SPY, semiconductors, tech, and make a thesis from there. But I can't offer a lot of these little trades like Rocket Lab or Rig or Rigetti, a lot of these little cool plays that can actually make a lot of money. Well, that's what this AI is going to be for. This AI is going to be going through a lot of these different symbols that I would not have time to analyze, you know, in my life, that will follow my rules to a T and will create those buying opportunities and selling opportunities. So that's going to be a very, very, very useful tool, whether you're an experienced trader or you really don't know what you're doing. It doesn't really matter. That's going to be a very, very quality tool. Um, so that's something I am working on in the short term. I do expect to have that up very, very likely close to the end of May. Um, the second project I'm working on is that I am going to be trying to get my book written this year. And that book is really going to be about the basics, fundamentals of how to do technicals, how to read symbols, how to read structure, how to analyze structure, and just really give a good foothold into basically how to technically trade without just guessing and buying and selling into the wind. So, okay, got my spiel out. Thank you all, everybody. Thank you for your patience and everything. And I will see you all in next week's video. Again, there will not be any streams this week because I am still healing my hand. But come next week, I will be streaming full time and we will be getting those classes uh, started very, very soon. Again, I've been talking about doing those afternoon classes where at least 2 times a week, I want to be able to sit down with people and go over technicals in real time. So that's something we will be doing as well. Okay, I'm going to stop rambling. Have a good day, have a good night, everybody, and I will see you in next video. Take care.